Hi, I'm Lisa. So today I have a guest with me, and we're going to do a little chatting about real estate, especially about the interest rates being up to 8% now. This beautiful young lady has been on a journey with me in the past on my hunt for real estate, for rental properties to add to my portfolio. And so she crossed my mind and I reached out and I hope to do some other things with her in the future. And so this is Billie. Billie, do you want to tell us a little bit about yourself? And she is a fellow YouTuber, so please tell us about your channel.
Hi, my name is Billie, and my channel is Billie Said It on Air. So if you haven't already, can you please subscribe and watch a few videos and share any feedback? I am happy to be here today to discuss this tumultuous real estate market that we're in and go over your journey and maybe provide some tips for other people along the same journey and provide maybe some insight and feedback.
Okay, so her channel is right there on the page for you, but it'll also be tagged in this video. And what type of things are you doing on this channel? I know you've had channels in the past, but what are you doing with this new one that you kicked off recently?
Yeah, so this new channel is a baby channel. It is just coming up on 30 days old, and I discuss various topics on everything. I talk a lot about parenting and postpartum depression and just kind of different tips that I've learned in general over time. So it's more of a just kind of me expressing myself, finding myself, and just kind of sharing it with everyone.
Okay, okay. All right. So, as she said, if you haven't already, subscribe, share, like, comment, check out her channel. So, yes, you were on this journey. You were on this journey with me in the past. We found a two-family house, and we closed on it a couple years back in the height of all of the lockdown and everything that we were going through.
Yes.
And my interest rate on that property is 3.375. I have two mortgages. My other mortgage interest rate is 3.25%. But the headlines that we are seeing lately are letting us know that interest rates are officially at 8%.
Yes.
And it's really like bringing me down. Unlike
Bringing
my investing, my investing has never come to a standstill. I invest daily, I invest weekly. Building my real estate has just been a struggle between finding properties, the price of the properties soaring, and then the interest rates. Even with the lack of inventory, everything. It's just been one thing after another. First, just constantly being outbid, just people coming in with all cash offers, no contingencies. It's just I've just been at a standstill for a while now when it comes to real estate. And
right.
I just wanted to chat with you a little bit about it and take a look at a couple of articles about, the situation that we're in and get your thoughts.
Right. So,
Yeah.
just like you said, with these interest rates going up, it's not a good thing for our buyers or investors who are looking to purchase because a lot of that budget gets eaten up if you're taking a loan out on interest rates. So, your monthly payment will go up drastically, even with a 0.5% increase in that interest rate. So, for it to go up as high as it is making a lot of people not even able to afford to purchase any real estate right now. Maybe they were able to, but as the hikes kept climbing, they're no longer able. They don't qualify anymore. So it's very frustrating for a lot of people, especially a lot of clients of mine have bid over 50,000 of the asking price and we're still outbid and it's been going on and it does not seem to be letting up at all.
Yes, yes. So like you're saying, a home that was say 250,000, quickly went up to 300,000. And
Right.
then as the interest rates on top of the housing price going up, the interest rate going up, it just made homes so unaffordable.
So
Um,
unaffordable and out of reach.
I'm reading conflicting information. Just and no one knows. No one can see into the future. Just like with the stock market, price analysts and price forecasts. Human beings are coming up with these numbers
These
and
numbers.
trying to figure out this. And you have to take it with a grain of salt. They don't
Right.
know. They can't tell exactly what a stock price will be in the future, just like we can't tell for sure where the interest rates will be by the end
Right.
of 2024.
Right.
So
Right.
I want to take a quick look at an article with you. I've read conflicting things. I've seen on the news where they're saying it could be down to 6%, hopefully by the end of next year. And then I read the total opposite, that it may not. It could still be extremely high.
Right. And I also get the same type of feedback with that is we don't know which way it's going to go. And like you said, it's similar to that of the stock market. And so one has to decide if it's worth taking that gamble. If you find a property that you feel like, it fits your needs. The only suggestion, the same way you would have to do if you were purchasing in the stock market, is you either buy it and then just kind of wait and see how things goes. Now, with the good thing with it being the real estate market is you can always refinance if the interest rates does come down and see if that makes financial sense. So you do have that bit of a cushion that you don't typically have in the stock market. So like again, if it's gonna fit your needs and hit the target and it's within your budget, the go-to right now at least, and again these are all guesstimates, we don't know, is to just go for it because you do have that sort of safety net.
So I'm not looking for a primary residence. I'm looking for rentals. So
Right.
with that, if the numbers work and I feel like I'm going to be profiting even in the time span while I'm waiting
Right.
to refinance, however long that takes, that's one thing. I will
Right.
go ahead and do that. Thankfully, I'm not looking for a primary property
Right.
because there'll be nothing to offset
Right.
how I'm going to pay for the mortgage for myself
Right.
other
Right.
than my paycheck. And, just like we're saying with everything, inflation,
And the one
inflation.
thing to consider
Killing us.
with the interest rates being as high as they are, with you being an investor and having the rental property, is with it being higher, your mortgage is now higher, and so therefore your rent prices will be higher in order for you to maintain a certain profit level. Now, on the flip side of that, though, is when you do refinance, your profit margin then increases because your rent prices would remain the same, although your mortgage price will hopefully have declined. And so that's the hope in all of this chaos.
But another struggle in this is that you've been through this experience with me also, especially when you're buying a property with renters in place. You can only raise the rent so much, and there's so many tenants paying under market rent. And
Right.
then they
And
want to sell the house for this
that
astronomical price and give me that burden of deal with people paying rents that are just totally 10 years outdated.
Yeah, that definitely is a problem, and it does vary state by state when it comes to that. Certain states have the protection of rent control. Not
Mhm.
all states have that. So some states did have the luxury of increasing their rent, $500, $1,000, in a month, giving a 30-day notice. Hey, your rent, if they're not on a lease, obviously, your rent is going to be this amount after December 1st going forward, and they either paid it or they didn't. And that's a part of the housing crisis, in addition to the interest rates increasing. And so with being in a state where we do have that rent control and we cannot just raise the number to whatever amount we felt like we needed to cover certain expenses, that did it hurts a lot for investors for sure.
Let's take a look at this headline. Mortgage rates just hit 8%. So this is from about 2 weeks ago. Should you still buy a home? And this is one of the articles that touched on what I was mentioning about there is no guarantee that rates or home prices will get any cheaper by 2024.
Right.
And I really think we have to take this in mind when that we cannot foresee the future.
We can't determine if it's going to go up or down. We don't know if home prices, if the value of the homes will even remain the same, even if interest rates continue to climb or not. Because then that's the other side of the coin as well, is if interest rates drop, right? But also the value of your home decreases, you're still in a not so great place where you owe more on the house and the house is worth now.
Great point there. Let's jump over to the other article that I was wanting to share. Okay, so as you were mentioning about refinancing and just trying to move forward with your plans and just, not let the situation hold you back. This article, let's take a look at this headline. Housing market affordability is so bad that Zillow says it may take you 13.5 years to even break even on a purchase from July onward. And this article is from just 4 days ago.
It's really it's really sad, just like seeing, hearing, reading all of these things, because 13 and a half years is a really long time. Some people, maybe they have their 5-year plan. Their plan was to purchase a house, whether it be for investment purposes or for their primary home, and to stay there for 5 years, or own it for 5 years and then turn it over and use whatever equity they have in it, and then use that going forward to build into the next step or phase of their life. You're almost forced to hold on to something that is not a part of your long-term investment plan, unless obviously you wanted to have this is your forever home, then this doesn't apply to those particular people. But for people who are not planning on being tied down to that property for such a long time, it's heartbreaking, honestly.
Yes, yeah. And it definitely is a struggle. Like the first line here is saying that the market is at its least affordable and least accessible it has been in decades. And about 2 decades ago, in the early 2000s, I purchased a home.
Right.
And it was hard for me then. The interest rates were about 5% at that time. So they were high, but the house price, I was still able to find something and manage with that interest rate. Today, people can't find a home. I know in my area, you can barely find anything. When I start looking for homes, at in no time, I'm in the $300,000-$400,000 range. Easily.
And those properties still need work in that range. Those are not nice. You get everything, you just walk in and move in ready. You're paying over $250,000 for this property, but you still need to put in $60,000 to $100,000 worth of work just to get it to where it needs to be. So it's just insane. It's where are people coming up with the money for it?
They're not. That's what's happening. They're unable to. And on top of that, rent prices are also
insane.
And
so that's the other side of the coin, is if you don't buy now, you're saying to yourself, hey, maybe I should wait because I want to see if the interest rates go down. Well, in the meantime, if you don't already own something, you're renting. Your rent is costing you more than what your mortgage would be. So then you're forced to still purchase something now just to save money. And at least not only is your monthly cost will be cheaper, but then at least you get the tax deduction for the interest paid on your mortgage to kind of offset, like you're trying to get money any kind of way back in your pockets, right? So then it's almost like you have to, and then you end up with something that maybe you don't love, but this is what your budget could afford. And then also, again, looking to save on your monthly expenses. And it's just not good. And again, now what I say to clients is, if you're going to buy, because we don't know the financial future of the housing market, what's going to happen, have a plan B. If you're saying you don't want to be here long term, have a backup plan. Like, if I am here long term, then this is what we're going to do. So that way your whole plan doesn't crumble. Have a 10-year plan, have a 20-year plan, because you may very well still have this property at the end of it. Again, the interest rates may or may not go down, and regardless of if they do or not, your value of your home may or may not go up or down. And so you have a lot of things to consider, so you
Yeah.
need to be as cautious as possible.
I couldn't imagine needing to buy a property somewhere, like if I needed to work in a certain area or something, or I wasn't sure if I was going to be there long term. I couldn't imagine having to buy a house and get myself locked into an interest rate like this and not know if I would be able to sell, because you have to have the right buyer with the desire to buy in this market right now. So
Right.
I'm glad that I'm not in the situation as far as my primary property, but I'm also, as for the reason why I wanted to talk about this with you, to share the situation and just share my, disappointment and the struggle and my aggravation of these interest rates being so high, and on top of it, the housing prices being so high, and just me having been at a standstill for the length of time that I have been,
Right.
in trying to add to my real estate business, to build up my portfolio, to be generating the rental income that I wish I was.
It's frustrating. It is.
Okay, so we're going to take a look at another obstacle that is impacting this whole housing affordability situation that Billie just brought to my attention. So, this headline is Housing Market Predictions for 2023. When will home prices become affordable again? And it's from November the 3rd.
Where it says what home buyers can expect during a government shutdown. They mention how the government loans, such as FHA or VA loans, or the USDA loans, which applies to the agricultural, like, farming and all that, but specifically for the FHA and VA loans directly, if a shutdown were to happen, those loans would come to a pause, right? Because they're funded, they're ran by the government. And so that means that anybody who is using currently or attempting to use that form of financing to purchase their home, they have to wait until the government reopened again. And so that's impactful, because for those of you who do not know, having an FHA loan or VA loan requires you to put less than the 20% down. So depending on the terms of the loan, like for FHA, it's typically about 3.5%, depending on that you would need to put down of the purchase price of the home. So 3.5% of the purchase price of the home plus your additional closing costs. So if those loans become a non-option, and then you're stuck with the conventional loans, which require 20% down typically, that's a significant difference, because you need the 20% of the purchase price to put down, and still your closing costs on top of that. It would take home affordability or home ownership as an option altogether out of the equation for a lot of people. A lot of people depend on those loans to be able to purchase and to qualify for a home.
Great points, and thank you for bringing this to my attention. I'm no longer in this particular situation, because I already have purchased homes a few times. I'm not eligible for this, but it's just showing me that there are more obstacles than even I had thought about, with people trying to get themselves in a better place, get out of renting, be able to buy their first home. It's just such a hard economy that we're living in so many different ways. Not
Right.
just it's just one thing after another. It's the groceries, it's the home prices, it's the rent, it's whatever you are dealing with. It's just a different world right now that we are living in. More struggles than many generations before us have ever had to deal with. It's just
Right.
one thing after another. But we have to push through and just continue to try to do the best to move forward with our plans. And If not today, you have to continue to save and be mindful and be ready when things improve for the housing market. But also, as always, want to give people encouragement to stay consistent with your investing, with saving into your high yield savings account, with doing all of the little things that are going to help you to be in a better situation. If building up your real estate portfolio, getting your first home, if these are things that are in your future plans in the next few years, just continue to stay consistent so that you're ready when the time comes. That's what I'm doing right now. I have money on hand, ready when the housing market improves, when there is more inventory, when the interest rates come down, when I'm able to find something, even if it is right now, that I can get into. And like I said, as long as I'm able to be profitable in it, I would make a move on purchasing something, even with interest rates as high as 8%. So let me know your thoughts. Would you buy the right property if you came across it, even with an 8% interest rate? Can you relate to anything that we're chatting about here? Has your rent been increased? Were you able to refinance and get a lower interest rate like I was at 3.25%? Thank you so much, Billie, for taking the time for chatting with me and listening to my frustration about this whole real estate market that has been on a standstill for me, but just evaluating all of the obstacles and just sharing your perspective, and especially sharing about, tying in different elements to what's going on, like with the government shutdown. That was really good information.
Of course. Thank you so much for having me. I appreciate being here, and hopefully the information that we discussed today will be helpful to somebody that's watching. And again, if you have any additional questions, suggestions, thoughts, definitely leave a comment.
And again, check out Billie's new channel, Billie Said It on Air.
Yes, please subscribe.
Thanks for watching. And Billie, I'm going to have you back on again soon, because I know there's some other things that we've been talking about that, as content creators, I'm asking you, can we bring it online and share? Thank you. Good night.
Thank you. Have a good night. Bye, guys.